Politici pakken de bankencrisis helemaal verkeerd aan. Door hun benadering leiden de goede onder de kwade en blijft de noodzakelijke sanering van de financiële sector uit. En dat kan ertoe leiden dat de economie de zwaarste tijden tegemoet kan gaan sinds de Tweede Wereldoorlog. Dat voorspelt in ieder geval beleggersgoeroe Jim Rogers. Hij was de gast in Nederland bij ABN AMRO en RTL Z sprak met hem over de crisis en over grondstoffen. Well, Mr. Rogers, good to see you again after 1 year almost. How are you doing in this crisis?
Well, first of all, I'm delighted to see you, and second, so far so good. You know, I had sold a lot of things short. We discussed last time that there were a lot of disasters coming. They've come, which has been profitable for me. I don't particularly like talking about them, but you know, they did happen. Some of the things that I've owned are down, of course, but the things I shorted are down more.
Last year, you advised people to invest in commodities. The commodities have gone down. Those people have lost quite some money.
Right.
Does it bother you?
Well, of course, I don't like anybody to lose money, including me. But I also advise people to be short, to have hedges against other things. So on balance, they should have made more money than they've lost.
What are you doing with your commodities now?
Well, I bought more commodities recently. This week, as a matter of fact, I bought more of the ABN commodity index. Bought more yen. I'm selling short the U.S. government bond, the long-term government bond. Bought some China. Bought some Taiwan. That's what I've been doing this week.
Is that a way to make money in a market like this? In markets like these? Because
I hope so. In the last 2 weeks, I covered a lot of my shorts in the U.S. You know, as we discussed before, I had a lot of shorts. I've covered a lot of those shorts. I'm still short the investment banks in the United States. We'll see. Ask me in 2 weeks. Ask me in 2 years whether this is a way to make money or not. Well, then we'll know. By the way you come out of a period like this,
yes.
We're in a period of forced liquidation. This has only happened 8 or 9 times in the last 150 years. What we're seeing is historic. Not that that makes it any fun for people who are losing money, but in a period like this, everything has to be sold with no regard to the fundamentals. The way you make money is to figure out what is going to come out of this with the fundamentals unimpaired. The only thing I know where the fundamentals are unimpaired are raw materials. This is all good for commodities coming down the road because no farmers cannot even get loans to buy fertilizer now. Nobody's going to open any zinc mines. Not that they were anyway, but nobody's going to open any zinc mines. So the supply of commodities is being damaged even more. We know that all supplies of all commodities are in a secular decline. Now, we're in a cyclical decline for demand because the world's in recession. But coming out of this, the things that are going to lead will be commodities again. That's the way you've always made money in previous periods of forced liquidation. I mean, the fundamentals of General Motors are impaired. The fundamentals of Siemens are impaired. The fundamentals of cotton are improved by what's going on here. So
you have to have a strong stomach if you want to sit out and ride.
No, I agree. That's why I suggest to people that they always try to be hedged in one way or another.
But you don't consider the commodities bull market over?
Oh, no. If anything, I just explained it's improved. No, all this is going on. The International Energy Association, which is the body which sort of studies and looks after energy, oil, is coming out with a study soon which showing that the reserves of oil are continuing to decrease at the rate of 6 to 9% a year. I mean, they're warning there are serious energy supply problems coming. The inventories of food are the lowest level they've been in 50 years. 50 years. I mean, all of the things that have happened since I saw you last, the fundamentals for commodities are even better, not worse. The prices are down, yes, but that's the way markets work. Not a lot we can do about pricing because that's how markets are. Oil, the bull market in oil started in 1999. 3 times in those years, the price of oil has gone down 40 or 50%. It was not the end of the bull market. That's how markets, well, now it's gone down 4 times.
Yes.
That's how markets work. I mean, is it the end of the bull market? Absolutely.
Down even more than 40%, the oil market.
It's down, I said, it's gone down 40 or 50%, 3 times in the last 3 years. This is the 4th time. This time it's down 50%, you're right. Is it the end of the bull market? Absolutely not.
So,
and even if we're unless it's perpetual economic decline, but even if it's perpetual economic decline, in the 30s, in the Great Depression, commodities hit their bottom first, started up going before stocks, even though the world was in depression. Still, the place to be on the long side was commodities.
So you think when all this is over and the economy starts growing again, the shortage of commodities will be even bigger than it has been in the past years?
I don't think, I know. I mean, these are simple facts that you can look up very easily. In the 70s, the economies around the world were in the tank. We had one of the biggest bull markets in commodities we've ever had because there was no supply. As I said, even in the 30s, commodities went up long before stocks, even though the economy was in the tank, because there were shortages. This is the way the world has always worked.
But according to analysts, this crisis will cause major shifts in the world economy and world politics, and everything can change from here. It doesn't necessarily say it will, but it can. Don't you think the worldwide trade for which commodities are needed is going to be deeply distorted by all this?
Well, if your suggestion is that we're going to have the world's going into economic decline from which you'll never recover, may I suggest you sell your Siemens? Because Siemens is going to go to nothing. May I suggest you sell your General Motors, IBM? They're all going to go to nothing in the kind of world you're talking about. If that's the way you see the world, then you better sell everything in the world. But even in that kind of world, as I said, in the 30s, commodities were the only place to be where you could make any money at all. But in your kind of world, I'd still rather own commodities. I got to own something. Mm-hmm. The only way that I can see you can make money in your kind of world is to own wheat, to own, maize, to own oil, because that's the only place you're going to be able to make any money at all.
But even gold is going down these days.
No, I explained this, forced liquidation of everything. This has only happened 8 or 9 times in the last 150 years. If you're losing your credit lines, or if you're getting redemptions, or whatever's happening, you have to sell. It doesn't matter. I live in Singapore now. In Singapore, which is one of the great oil trading centers of the world, because all the oil goes in Asia goes through there. The trading of oil is down 50%. Exxon cannot even trade with Goldman Sachs. I mean, J.P. Morgan cannot even trade with Shell. We're talking about major companies because they're forced into liquidating everything. I presume this is a temporary thing. If your scenario is right, you should suggest that people sell everything they own. I would suggest even if they sell everything they own, they better own some commodities because that's the only thing that's going to make them any money at all, even in your kind of scenario. This is a period of forced liquidation where it doesn't matter about the fundamentals.
When do you think this period of forced liquidation will be over?
I would like to know. If I knew that, we'd all be rich, wouldn't we? I told you, I cover a lot of my shorts in the last two weeks. Now, I haven't covered all my shorts. I've been buying more yen. I've been buying more agriculture. I've been buying more commodities. I've been selling short the U.S. government bond. I mean, the U.S. dollar is going up now. Not that the U.S. dollar's got any fundamental value. It's that hundreds of millions, billions of dollars are short the U.S. dollar. They have to reverse their positions.
So this is a temporary thing as well?
This is a short squeeze. In simple language, it's a gigantic short squeeze because there's such huge short positions in the U.S. dollar. And so many people have borrowed dollars in the last few years because they knew it was going to be declining. But eventually they got to pay them back. So it's a temporary thing. I'm happy to see it because then I can get out of the rest of my U.S. dollars, hopefully at a higher price.
Taking some distance, what do you make of this gigantic mess the financial markets are in right now?
Well, the financial markets are going to get worse. Many more people are going to go bankrupt over the next few years. But remember, the financial markets and the economy are two different things. We're going to have bad economic times, don't get me wrong, but the financial markets are going to be the worst place to be for years to come. The real economy is going to do better. Some stocks are going to do much better. But again, the place to be is not in the stock market. The place to be is in the commodity market because that's where the fundamentals are sound. I mean, the fundamentals of Morgan Stanley are badly damaged in this period of time. The fundamentals of zinc are not damaged at all. The long-term secular damage of the fundamentals of zinc are not damaged at all.